Okay, so now I'm talking about why I switched to the 1 minute chart. I mean the 5 minute chart from the 1 minute chart. So on the 5 minute chart, you get faked out so much less. There was a day where I got faked out so many times on the 1 minute, and on the 5 minute it was like a perfect. Okay, so it was here. It was this past Thursday. Look at this mess. Okay, let me make sure we're at the same point. Okay, it's down here. So we had a bunch of fair value gaps here, green ones. We had so many. And I was like, once we inverse, it was really just this big one, honestly. Once we inverse this one, we're going down. And we did. We inversed it. We did have some wicks, though. We inversed it, and I got in a trade, and we inversed 3. So I'm like, okay, got in a trade, right? And it just went away from me. But on the 5 minute, we did not inverse anything. It respected it and went out. And then when we finally reversed up here, finally inversed the fair value gap up here, it held. And even here, candle close to go down. If you wanted to go down, we did get a nice inverted here to go up. I think that's the same one that matched this one. But there's just so many fake outs, like here, market structure shift. Like there's so many fake outs on the 1 minute that you can easily get faked out. And I know people, you get better entries, your stop loss is better, but there's another day that happened too that I got faked out, but I got right back in. I think it was Wednesday. Yeah, here. I got faked out because we did get we got a fair value gap somewhere, a bullish one. We got one here and another one right next to it here. And then we did get a full break of structure, a strong displacement close below this to keep going lower, and we did not. I've also noticed, I've been trading the macros, it will make a displacement candle just to inverse it. I've noticed that. However, like you see how this is the 1 minute. I don't know, it's windy outside. I did get back in on this inversion on the 1 minute, so that was a good, play. However, on the 5 minute, what is it right here? The 5 minute, we got just the inverse here. No fake outs. I think since I got faked out, I waited for it to close way above here. But even on the 5 minute, there's no. I lied. This is the 1 minute fair value gap. There's no fair value gap here. So in the 5 minute, you wouldn't even got in up here. But I waited after the 1 minute. I said I'm waiting till we candle close above. I waited for a full market structure shift, and the 5 minute waited for that as well, or even on this one. So I got in up here at the candle close. Obviously, if you're in the 1 minute, you got in here, or still in the 5 minute, you can just get in after this fair value gap. So that's still the same entry as this one. But I want maybe to play with getting in or confirming on the 5 minute and then going down to the 1 minute. But I've just noticed, like, I have my hour chart on this side or my ES chart. I usually look at ES on this. And then I look at NQ on here, sit on the 1 hour, mark out my liquidity points. Once it's swept, I go down to the 5 minute because you will not get faked out because there's no gap here. There's a strong displacement candle, but it came right back up. Even probably could have got in off the top of this candle on the 5 minute if you wanted to. Change of state and delivery isn't up to here though. Yeah, it's a big stop loss. This ultra has been my problem. Having my stop loss too tight when we don't get a confirmed market structure shift, that's far from, far from the swing high or low that was before the reversal. Because technically, this is your stop loss always. The low before the reversal up and the high before the reversal down. And sometimes it will just displace so much and not confirm your entry to way up here. And then this is a huge stop loss. But the trade did play out nicely. So I wound up closing in profit this day. And I think my stop loss was like right here or something. And then you just took it to the opposing liquidity for a nice almost 1 to 3. Even with the big stop loss, you probably would have got 1 to 2. So yeah, I just been preferring the 5 minute, but I do see how, like, once you get confirmed, but this is not really a confirmation either because we got faked out on so many fair value gaps up here, and we still got, and then this was giving, unicorn setup. When this came back up, a lot of people were thinking a unicorn setup. We have a fair value gap that lined up with the breaker. A beautiful unicorn setup to keep going down. So that's why I was like, it just inverted it. So that's why, like, two with gaps now, I wait for the reaction off, even on the 1 minute or the 5 minute. Like, yeah, it's here. I need to see it close below, or I need to see it break through and close above before I even respect the gap. I used to, like, set my limit orders like most ICT trainers used to do. Like, set your limit orders if you think it's at the bottom or top of the gap, depending on your bias, or at the breaker. You would have your limit order set the breaker to go lower. But no, I'm waiting for it to react out or react up from the gap. And again, sometimes you will get faked out, and it happens. And even here, we had like a red fair value gap. We had two here, and that lined up with this one here, this top one. So I was waiting for that top one to get inverse. So it happens, but I feel like the 5 minute is better. I know there's other YouTube videos about that, how like the 1 minute is killing your trading, and it really did start to kill mine. So I really did go back to just the 5 minute, and it's a little better. I mean, obviously the stop losses being bigger does suck, I'm not gonna lie, but you just have to go down on your contract sizes, and that's just it. And even on, I remember watching ES on, I think it was that Thursday when I got faked out, and ES didn't candle close below that for value gap, and it inversed another one on the 5 minute for sure sign that we were going higher the rest of the day. So it's like, it's just better, and you don't get faked out as much. It respects these fair value gaps the best, and once they inverse, and yeah, that is why I feel like you should trade on the 5 minute. Also, you can see all day's price action in one chart, which people like to see, versus the 1 minute. You have to zoom so far in and out, but you can see like all day price action on the 5 minute, which is nice. You can see like liquidity points and things very easily. So I suggest trading on the 5 minute. My trading has been better, and it helps you with patience. You have to wait 5 full minutes for candles to close versus like 1 minute and 30 seconds. So you have to be really patient. There's times where like candles like this, you're like, oh, this. I've seen candles look like this. They're completely white, like you're about to close, and you have 2 minutes left, or even like 30 seconds left, and then it closes all the way blue. Like, you just have to wait for a full candle close for sure, and it just helps with your patience. So yeah, try out the 5 minute, or let me know what time frame you like. Some people like the 2, some people like the 3. I prefer the 5.